Check. Can you hear me? Can you hear me now? Can you hear me now? There's a faulty connection by the looks of things. Everything looks okay. Can you hear me now? Sorry about that, guys. Hi. What was I saying? Well, you probably guessed what. Can you hear me now, John? Noah? Noah can hear me now. Thoughts? Hope you can hear me. Right. What I've been saying. Well, you guess what I was saying about cryptos. Bitcoin all-time high this yesterday. We've pushed again higher this today. This is the daily time frame, and the $100,000. So sit on your surfboard, as I say, surf the trend, surf the big wave. It's moving. We had a strong day on the 11th, obviously strong day on the 6th. On the 5th, the actual election, the actual election day as well. Remember, Bitcoin we trade all the time. So big positive candles. Airing to the upside. We hung around 87,000 for 3 or 4 days. Nice base. That's our base now, 87,000. And another big blockbuster day yesterday, up through 95,000. And 100,000 just looks inevitable, doesn't it? I don't know what you guys think. Thoughts? Thank you very much, guys. I say, any particular asset you want to have a look at, please let me know. We'll have a look at it. But that's what I was chatting about. I was also saying when we were looking at the calendar. Where's my calendar gone? I've lost my calendar. Where's my calendar gone? I've lost it. We'll come back to the calendar in a minute anyway, when the data comes through in 5 minutes. So, and then I was just saying about energies. We're looking at oil, given that we're now back through $70. $70 for US oil. West Texas Intermediate, WTI, you often see it. Has been a key pivot area, as you can see here. This is back to the beginning of September, as we came down from the $80 high we had over the summer, and the low we took, which took us down to $65 or just under $66 range. So these five numbers, these fives and zeros, continually in play on markets. Remember, guys. So $70, we're through that today, and I was just saying on this setup here, the MACD and the parabolic SAR. The parabolic SAR has flipped for the first time in nearly 2 weeks to the positive on the daily time frame here on oil. So see how that closes tonight. If we hold up $70, that's relatively positive. The MACD had crossed earlier. So I don't know how many of you trade energies, but as I said, do let me know what you're interested in and trading and what you're looking at on a day-to-day basis. And all okay. Thank you very much. Guys, where are we? Energies, yes. So next, the majors, major crosses. Got 4 messages here. All right, some of you have joined me direct. No, good afternoon, John. Good afternoon. Hope you're well and your training's going well. Anything I can help you with, please let me know. So Aussie, key pivoting around the 65 level, Aussie dollar. So Aussie against the dollar here on a daily basis. There's that 65 pivot area again. We're continuing to move down. It's bounced a wee bit here at the beginning of November. It gave up the ghost again, now bounced. So 65 still key, but the trend remains very much to the downside for the Australian dollar. But again, the sign, a bit of signs of life here. We've had a cross here on the MACD and the signal line earlier this week. Parabolics are still negative, still way above the price action down here at 65. So still trending low, and the cross has been quite weak. So just watch that one if you're trying to trade that. Obviously, the divergence in policy remains very set. The RBA not doing anything for a while. Fed looked like they were going to do more, looked like they were going to go in December. Still the potential, a possibility of that, but probably not now. So see what comes of the final Fed meeting of the year, and any more appointments already. More noise about the Treasury Secretary in particular is the one that markets are really looking for from Trump. Dollar CAD, we said earlier in the week, 141 was our big high and our big support area. Now we're bouncing into it again today, 138. 50 is still 5 minutes to the news, so I'll just keep running through these. So 5 minutes to the news. So this 135.50 zone, 139.50 area is a key support area. It's held for 3 days currently. So a breach of that will take us down to the next big zone, which takes to 138.75, which you can see was this high here we got again at the beginning of the summer. It was a resistance area as we were going up, it was support areas as we had our last sort of blub at the beginning of the month, and then we rallied through 140 and went to 141. Nice tweeze the top there, short on that down candle there, and down again on a Monday. Tuesday, Wednesday, not quite sure, but a rejection of higher prices on the wick there. If we zoom in, a rejection of higher prices yesterday, and we're bouncing around this 139.50 zone, which is our resistance here to the upside. So a break here, we still need to break this channel to the downside here of 138.75, this area zone here, but we're still holding above it currently. So a break over there, and there's a lot of fresh air to the downside. And again, we've had a cross here on the MACD, although the parabolic star hasn't flipped to the upside on the 2 down days. We had a cross there, so down, so CAD sideways. The 3 majors, the yen, as we've seen, let's zoom this up, got to 156.75, our top here last week, and then we've moved down, but clearly we really don't want to go through 145. See our big yellow line here, 145.00 has held. It was resistance to the upside, and it's held so far 1, 2, 3, 4, 5 days. But again, a break of that takes us back to 150 quite quickly, potentially, because there's some weak support through there around about 152, but halfway between, just over halfway between 154 and 150 to the downside. We've had strong yen days, weak yen days, and we're sort of still aired or biased to the upside. However, having said that, we've had enough chopping and changing and consolidation at highs to see a flip of the parabolic star and a sort of weak cross of the MACD signal line as well. So it sort of start to air or bias to the downside, but I'd like to see a significant or a clear break of 144.00 before we start looking to take some shorts on that in any big play. So dollar still very much still on the front foot, looks a bit wobbly, more wobbly against the yen than the other 2 majors, the euro and the pound. Euro, obviously the hugely significant 105 level. We'll be talking about it a lot. It is a very, very significant number. We smacked into it at post-election very, very aggressively, and then we've bounced from it, and we're now really channel bound. We're channel bound between 106 at the top, 105 at the bottom. We've been like that for 1, 2, 3, 4, 5, 6, into our 7th day. But as you can see, of the 7 candles, 5 of them are red, 2 of them are green. The green ones haven't broken the top of the channel. The red ones still haven't broken the bottom of the channel. Buys at 105, but there's more downward pressure than upward pressure. MACD signal line still moving lower. Parabolics are still moving lower. So if 105 gives way, it could move down quite aggressively. On 105.20 is where we trade, as the news has just come out. So I don't know what I've done with my calendar, but let me just find it here. Sorry, I'm at the my calendar quickly. So calendar's actually correct. Let's just have today. Let me just have get rid of the filters. Just on the majors. Apply. There we are. So Philly Fed, as we said, notoriously volatile. It's coming at 8.6, so better than expected. Last month has been downgraded, the employment to -2.2. The headline Philly Fed is coming at -5.3, so that's slipped negative. See what I mean about the volatility of the Philly Fed index? It's probably why investing.com has a high impact event, because it can chop around a bit. But yet again, claims coming in better than expected, 213,000. So very, very robust set of jobs numbers continues to hold on. However, there is a bit of a disparity here. The continuing claims, those that have been out of work or claiming a benefit in the US for more than 4 weeks, has gone over the 1.9 million mark, 1.908 thousand, as the Americans call it. And last week was also, was that upgraded or down? Yeah, more or less just by 1,000. But so this so a bit of a disparity between the continuing claims and the weekly claims. But that's a a low for a while. It's I'm not sure how. Let me just check the range on that. It's the lowest for a long time, isn't it? It takes us all the way back to May. So it's the lowest weekly claim since May for the weekly initial claim. So again, the trend continues. We had that spike over 250,000 at the beginning of October, but since that spike, it's been down very significantly, and it's the lowest weekly claim at 213,000 since the second week of May. So May the 2nd, it was 206,000. Since then, it's been above that number. So it's a continuing reiteration that the Fed's policy seems to be working, and the jobs market remains very robust in the United States. So let's have a look at our euros. Let's go down to our 5-minute time frames and see how we've reacted. As you can see here, our 105 levels way below here, but we've been chopping around today. I don't know if anybody's trading this on a short-term basis, but our low this morning has been 105.14. So as the data came out, we went to test that, but we've bounced off it. Let me just roll that too. So yeah, so you can see at the beginning of today down here, that's our low. Let's just put that in whilst we're doing this. I'll call it so that's our low for the day. Our high for the day, we should do, I'm trading this on obviously David is there. So that's our range, 105.54.9. Our low is 105.13.2. And as you can see, we're pressured or biased to the low end of that, but are rising on the data breaking. So just wait and see how it pans out. So we've got some sort of relative strong support down here. It's 105.15 zone. So this is still interesting to see on the 5-minute. We're still flipping lower. That's ahead of the data. This is as the data is coming out in this 5-minute time. So see how we settle. Interesting that we're coming through here. So a level above literally where we are now, 105.25. What this is 105.27.6. I'd say that's a buying opportunity. So we've come into this level to perhaps test the next level up, which would be here. 105.35 would be my next target to the upside. And a next one would be 105.40. So those five pips above that as well. See how that goes. So that's a buy from there for me. 105.28 we've got filled. Here, let's just put that on, and we can monitor that as we dip around. And let's put that through there. So I'd have taken that as a long. Obviously, it's trading in the news, but the new, we're 5 minutes into that now. We can take that now. Let me just change that to a dashed line, so I make it. I love this platform. It really is intuitive. They've taken the trading view and tweaked it with their order panels and their position panels, and yeah, it's really, really nice platform to use. So 105.30 we might have got filled on that, and we're sort of in the money, even though it's not on this strategy, but it's intuitive trading of the news. And again, see how the news of the day has been obviously generated the biggest candle of the day, and that's to be expected, isn't it? So so we've had some good jobs news, a bit mixed Philly Fed data, but it's spiking the dollar a bit. We got to our initial, we haven't quite got to our initial high there, 105.35 just yet, but maybe looking to see how that goes to the upside. So if we look at, we didn't actually look at sterling, did we? But let's just go back to the dollar index and see how that's reacted. So dollar index 106.50. Yeah, there we are. It's 5-minute charts defaulted straight to the 5-minute chart. So The initial reaction was a weaker dollar, ironically, so the euro going, and we're down here as well. So again, another one that's sort of in the range of the day, but earlier this morning we were all the way down here at 106.40, and our high for the day is where we've been on the data, which is also interesting, but it's rejected it clearly through here, 106.70, 106.70 is where our parabolic. So our dot is there. My phone's just gone off. To the top. So it's starting to unwind to the downside. So let's see if we get a run to this next level, which would take us to 106.47, that level earlier of the day. Through there, perhaps. Oops. I don't know, the red in there. I was just going to put a red on there. So that's our next target level, 106.47, and then the next one would be the absolute low of the day. If you've been trying to be a bit more aggressive on this, as we got horizontal red area, our absolute low of the day is close enough, 106.42. The actual low took us to 41, so let's not be too greedy. Call it 43, 44, something like to the downside. So 5 or 4 more pips as we're traded at 106.49 currently. Again, so it's interesting. The dollar index is going the opposite direction of the euro, of the dollar itself. Let's just go back to the euro. Unless I say, guys, unless there's something you want to comment on or anything you want to trade, but there we go. So that's the dollar index. I was going to go to the euro, wasn't I? Euro. There we are. Got in the money. Let's go off and running. No, it is going the same direction. What am I talking about? I'm mad. Sorry. So 105.35 has been taken out initially. Our high today, say 105.54. It's a bit further away. Our next level would be this little 15-minute cluster we had here at 105.40. So 105.40, our next line, our bid line to the upside. So we're at least what are we, 37 from 30. So we're 5 and 6, 10 pips to the good for the euro. Cable should have reacted similarly to the upside. Here we are. This is the pound. First, go back to the higher time frames on the pound. Sorry, let me just make that fit a bit better. There we are. You can see the hugely significant 120. Well, the hugely significant 125 is way below here, but we've been held up here on these hourly chart by the 126 level. That's held quite significantly. So there we are. We haven't been to test it since this test here on the 15th, and that was just an intra hour. It was about for 15 minutes. We went under 126, so it's held relatively well. So we're sort of not moving high. It's not trending in a sense. You can see how the MACD here on the 1 hour is sort of looping around. So it's very much a sideways action, but at this level above the key 125 and significantly enough above the 126 level. So the decline we saw post-election sort of flattened out. So, but I would like to see, a break of the next round number, which is 127 to the upside. I'll just put that in here on this 1 hour time frame. I'll call it horizontal line on there through 120. Make that full line and make that 120. Just make it 127. So 127 is the next sort of caveat. So you can see this channel bound. So buying at the bottom, selling at the top. And here we are as we speak with the data, the US data, exactly sort of 50% of that range at 126.50 so far. So range bound cable. So it's a bit more perky than the euro and the yen, but again, a break of that level when we could start to move up and even test the 130 level again. We'll see if the dollar continues to decide, but it's very much, markets are, because as I said at the beginning of the week, there's not a great deal of data to drive the markets. People are reading into some of the appointments that Trump has pushed through or has put on place as either the ones he's announced or the suspicions of the people he might announce. So I think it's really waiting for the PMI data tomorrow, the US PMI data tomorrow. Anyway, if I just see some, I don't know what they call it. If I change the filter, I think there was some out today, wasn't there? Include the low importance one and apply that as well. Some sort of peripheral data. There's been no PMI data. I don't know. It's Philly Fed stuff. IPI. Sorry, just bear with me a second. I was just reading the. No, so it really is. The key thing is tomorrow, and the US PMI data and other retail sales data. One from the UK, and I think German GDP tomorrow. There we are. Yeah, German GDP. So I'll change that filter again. We just go back to the high impact ones for tomorrow. So it really is tomorrow, and we'll be live for that again as well tomorrow. So we see it's a bigger day tomorrow, and obviously then we're into next week, the shortened week. Thanksgiving on Thursday, Black Friday Friday. So perhaps a lot of obviously then rounds up the end of the month. So a lot of data tomorrow. More home sales data, Canadian retail sales as well. Obviously, the weekly CFTC, that's the real where the real futures market sits, and how the real speculators are playing. So a lot of people ignore that data, but because it comes out relatively late for most of the world, except the States, watch that CFTC data. It can be very, very forward-looking and critical to see how we're going. See these huge changes in the yen number. Anyway, let's have a look at where do we get to? We got to the forex market, which is the dollar weakening on the the dollar weakening on the data. It's rallied as far as sterling is concerned. We didn't get to the high of the day. We're within a smidge of it, and it's turned back on itself at the moment. Gold, we'll miss out gold. Let's go to gold. I know a lot of you are big gold traders and follow it avidly. 2,666, sign of the devil, 666 for gold, but it remains again another one that remains well bid. If you look at the hourly chart, another good day for gold. Bugs this week, and as we said, unfortunately, I took off the light I had on these three key support areas, but we went through 2,600, didn't we? Quite significantly this week, and we continued to move through our other next targets. We had 2,640, 2,630, 2,640, and then 2,660, and all of those have been taken out this week. So you can see here on the hourly chart from the low down here on the 14th of November, it's been a bit of a consolidation, then a rally through the 2,600 level, and consolidation here through 2,620, 2,640, and then moved up higher yesterday, moved up higher again today. Our high of the day, oh, it's not showing me that one, isn't it? Showing me the high. There we are. High of the day, 2,673. So just shy of the 2,675 level, and $25 obviously shy of 2,700 itself. So 2,675, and this next resistance sits through here as well, 2,690 here. I know one of my colleagues is looking for 2,690 on the gold market. He can see this sort of congestion takes us back to the middle of the month, the beginning of the month, 7th of November, 2,690. So obviously the all-time high. Not that long ago, was it, when we were at, let's go to the daily time frame, when we went to 27.75 up here, 27.85, I should say, sorry. So down very aggressively, but bounced quite quickly as well. So it's had a really good week, and following through today as well. So gold on the bid, 26.65 on the back of the US data. So if there's no actual assets anybody wants to have a look at, I'll wrap this up. I'm going to have a look at the opening trades for the US stock markets. I'll just have a look at those, how they've reacted to the data as well. This is at our little last big fib level, wasn't it? And it's still holding the 2360. So stocks, although I say here that we flipped short, and we were short Thursday, Friday last week. It's been a bit of a consolidating week. 20,800 is where the Nasdaq sits currently. Obviously, Nvidia yesterday, the earnings were better than expected, but the outlook for the fourth quarter sort of somewhat disappointed pundits. And there was just to find the and there was a let's put it down here. There was lost my dear me, what have I done? Lost platforms. Oh yeah, sorry, clicked on the wrong button there. And there was a sort of disappointing outlook. So after hours, I'm just finding the actual stock Nvidia. After hours was down 0.76 of 1%. It's actually up 1.5% pre-market this morning, even though it's somewhat disappointing. So 148 has been recovered by Nvidia. So the impact, perhaps not as much as many were expecting, up at nearly 1.5% at the moment. But so although we had this big down candle on Friday, the action zoom up. The action since this week has been positive, but it's still engulfed by this big down candle. So these two candles here, let me zoom up. So the down leg we had on Thursday and the big down engulfing candle we had on Friday are still very much in play. As you can see, the parabolics are still flipped and the MACD is still sort of descending. So we haven't managed to break to the upside. So we need to break the top of that candle there at 20,830 to move to really start moving back up. However, conversely, we need to break this first quite weak fib level, the 23.6 level, if we're going to go down. And the market doesn't really seem to want to do that. So 20,500 is a big line in the sand. It's both a round number and a technical level, and has been so far this week, and it's held. If that breaks, we could quite quickly go back to the next fib level at 20,100 to the downside for the Nasdaq. So just continue to watch that. Obviously, today and tomorrow to round up this week, and then a shortened trading week next week. And people were sort of waiting for the Nvidia number, but we are moving to the downside. I know a lot of you trade the S&P. The Dow more so than the S&P 500, and obviously the 44,000 level last week and the all-time high at 44,500 level has been sort of sold off. But again, a bit like the Nasdaq, we didn't have the big candles on Thursday and Friday. There were negative candles, but not the significance we saw on the Nasdaq, the tech stocks. And so again, we've got this support here at this 43,400 level, which corresponds with this last pivot area here. This nice rally high at the beginning, the middle of October, before we then sold off again. So it's another one. The parabolic stars have rolled over. The MACD has also crossed. So this is short technically on this chart setup. But it's not going anywhere at the moment. It's sort of consolidating, so that can be both positive. You can read that both ways, unfortunately, both positively and negatively. I tend to bias the optimistic side. We're consolidating at highs, but we could also unwind quite quickly as well. So if this level does break, we could quite easily go back to test the 41,800 level. This level here, you can see through here was a key. A level as well as we were ramping on the way up. But as you can see, we can consolidate for quite a while. We are in a stock positive phase of the year. This last few weeks of any calendar year is relatively positive. Last negative December we had for US stock markets was 2018. It's been positive ever since, and previous to that. So looking for a positive end for the US markets into year end. One of my favorite intraday trading platform is the DAX on the short term basis. I haven't looked at this today. I'm saying that I haven't actually looked at it today. Let's get rid of. Oops. Didn't mean to do that. The candles. I want to get rid of that. Parabolics. Fib levels. What are we doing? There we are. So 19,500 was a real sticking point for the DAX, and we've been moving lower. And again, another one that continues to sort of consolidate. But on this daily time frame, you see the trend is very much the downside as far as the MACD line and the signal line concern on the MACD. But the candles are still consolidating like we saw on the S&P 500. So 19,000 is where we trade at the moment, and that's obviously a big line in the sand. 19,050 just doesn't want to, a bit directionless, to be honest. But the bias is still to the downside for that one. So a break of 19,000, this area through here, 19,000, 18,900, 100 point range, and we could start to move down quite significantly. But the candles are relatively small this week and a bit directionless as well, sort of consolidating to the sideways. So let's just go back to the euro before I wrap this up. Majors. In fact, we've got more data, haven't we? Today at 3 o'clock, haven't we? So we got the home sales at that's 2 in an hour's time. It's 2 o'clock. It's still an hour away, the housing data. So watch that for later. So quick wrap up. Better claims again. I've seen this many times. The best week for claims, as I said, from May the 2nd this year. So it's a good week for people to be finding jobs in the US. But the Philly Fed manufacturing index, as I said, chops around all over, came in quite negative and a bit of a surprise to the downside. So we had a weaker dollar initially, and we'll see where the euro is. We're still in the money on that 5-minute chart, weren't we? We were looking at. Can't remember now. Where we got in, was it this? It was this 105.30 level, wasn't it? So we rallied. Where did we get to? We got to 105. Not just shy of the 105.44. It's turned around. Oh no, still we got this is flipped. So we got in early, so we're still long on that one to the upside. Where did we put our day high? Oh, still that's a bit of a stretch too far. One would argue on that news, but still long from 105.30. So see how that ends up. Stop loss probably down a bit here now, around through here. 105.25. So take care, everyone. I'm going to wrap this up. We'll see you tomorrow for the big data. Another big data dump, the PMIs at the US, and we'll wrap the week up as well. So all the best. Take care and stay safe, everyone. All the best. Bye-bye.